Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schuller here at the New York Stock Exchange. Well, markets are coming off of a mixed session. The S&P 500 and the NASDAQ recorded gains yesterday, led by technology names, and the S&P 500 up for a second straight day. It's, of course, what's on tap the rest of the week that is keenly in focus for investors. So let's take a look at what is on tap, of course, as we continue our coverage here at the Stock Exchange. Well, the Consumer Electronics Show 2025 officially starts today in Vegas. CES, as it's called for short, is considered one of the biggest and most influential tech events in the world, and it is expected to include more than 300 companies on the Fortune 500 list, with over half of total registrants being senior-level leaders. We'll have extensive coverage throughout the show. And that doesn't include only NYSE-listed companies. Crunchbase's senior data editor will join us to break down how AI is playing a starring role in the venture capital space and what we should anticipate this year. And with the price of Bitcoin sitting about $100,000 a token, the global head of policy at blockchain intelligence platform TRM Labs will break down what we could see across the space during President-elect Donald Trump's second term in office. Well, as always, we are watching the markets for our viewers, of course, as trading plays out behind us here at the Stock Exchange. And investors will be bracing for a triple whammy of jobs data this week. In less than an hour, investors will get their hands on the latest JOLTS report, which measures monthly job openings, new hires, and labor turnover. Tomorrow morning, a new ADP national employment report does come out, and this tracks the number of non-farm private payrolls added to the U.S. economy in December. All leads up to Friday, of course, when the Bureau of Labor Statistics releases the December jobs report, and those figures could impact the Federal Reserve's next move on interest rates. The central bank will convene for the first time in 2025 at the end of this month. Well, joining me now with more is Luke Tilley, chief economist at Wilmington Trust. Luke, it is great to have you on the show this morning. And as we prepare for this trifecta of jobs data this week, what is your expectation?
Yeah, Kristen, thanks for having me on. We do think that the jobs data that you just described is the most important thing that's going to be driving markets in the short term and those Federal Reserve reactions, because what we see is a little bit of a risk of a slowdown. We've had about 5 months where all the jobs reports have been impacted by the storms and the Boeing strike, really pushing down job gains in 1 month, and then they surge back in reaction the next month. But if you look through that at a 6-month average, the 6-month monthly job gains are in the 140s per month. But of particular note is that the private job gains are 108,000 average per month over the past 6 months. And we see that as a downside risk because we know that the job openings have been falling quite a bit since 2022. As you said, we'll find out more in a little bit less than an hour. And that really signals weakening labor demand by firms, possibly because demand for their products is weakening a little bit, but also because maybe they're using AI instead of workers. So that's sort of the way that AI cuts both ways. We're expecting jobs to slow down to about 130,000 per month, and that includes the government jobs. So that's still pretty much on the low side. And the unemployment rate probably stay where it is at 4.2, maybe tick up to 4.3. But more importantly, we expect it to rise more than the Fed does and more than consensus does. We expect it to rise to 4.7 over the course of this year. We think that'll end up leading to more Fed rate cuts than are currently priced into markets, Kristen.
Luke, of course, we are keenly focused on the economy as well as announcements coming out of the Consumer Electronics Show. Technology has driven many of the gains that we've seen in the overall indexes like the S&P 500. How does the technology economy look to you?
Technology economy looks really strong. We really think it is helping to drive markets. Of course, some of those big tech companies have been the biggest drivers of gains in large cap, as you noted. We've also had some broadening of performance, which is encouraging. We are concerned a little bit as we release our outlook for 2025 right now. We describe the economy and the markets as a chutes and ladders economy, both for the economy and for markets. There are various things that could look like that old board game where they could carry you up a ladder in the economy and the markets could do quite well. And then there's also shoots that could knock you down a few spaces. And as much as we love tech and as much as we love that long-term story, one of the things that we're looking at is the possibility that valuations being so high are really priced to perfection. And we're just cautious and very conscious that any guidance that comes, earnings reports from some of the tech companies could lead to some pessimism there. So we don't have a pessimistic outlook, but we do note that those valuations indicate that things are priced for perfection. We're watching for any sort of chinks in the armor there, if you will, Kristen.
Luke, another factor, of course, that investors have been digesting this week is somewhat mixed messages on tariffs, but a positive report yesterday. At least that's how market participants perceived it. We had seen a Washington Post report that the president-elect Donald Trump was considering narrowing tariffs as opposed to huge tariffs, which he proposed along the campaign trail. Of course, then later on, he took to his platform of choice, Truth Social, and said that Washington Post report was not true, and we saw markets respond to that a bit. How are you planning for that as we await his inauguration on January 20th?
Yeah, it's a great question, Kristen. It's one of the things that we're watching most closely. We've actually noted tariffs as one of the possible shoots, as a lot of investors are worried about, but also one of the ladders. On the shoots side, we know that the proposed tariffs on the campaign trail would raise the overall effective tariff rate, for the U.S. Imports to 19% or so. That would be the highest since the 1930s, which was, of course, an incredibly protectionist time. Now, we don't think it's going to come out at those levels, despite what President-elect said on Truth Social yesterday. We think that there will be a lot of bargaining, but we do expect some of those tariffs, and that could cause some challenges depending on the level that they come in at, and depending if they are across all countries or if there are special deals, could lead to some of those shoots that we talk about, which cause some problems for the economy and markets. The ladders on the upside could be, I think that President Trump in his first term, we need to recognize that NAFTA 2.0 or the USMCA was a good outcome, we think, when it comes to tariffs and using them as a bargaining tool. And it really could help get some of our largest companies and some of our drivers of the indexes access to more markets worldwide, help some efficiencies, decrease some regulation. So it could be a boon as well. And frankly, Kristen, I don't think anybody really knows how it's going to turn out. So we're just going to have to be watching that closely as it progresses.
As earnings season will be here before we know it, including with some of these big banks kicking that off, what are your expectations, Luke?
Yeah, earnings season, we expect it to be pretty solid. Without digging too much into the details, but one of the things that we are watching out for is, as I mentioned, both with tech companies, but anybody across the board, are some of the chinks in the armor there. We have noted, especially as the economist, I pay particularly close attention to some of those consumer companies and consumer discretionary companies. We're looking for any notes that consumers could be weakening, or is looking to see if they are solid, to see if consumers can keep powering the economy ahead. We expect the GDP growth rate to slow to 1.8% this year. That would be the slowest since the pandemic. It's still pretty solid. And a lot of that is coming from the consumer, which we expect to slow down, but still remain pretty solid. So we're looking to those consumer discretionary companies to get some insight into that.
Luke Tilley, Chief Economist at Wilmington Trust. Luke, thank you so much for joining.
Thanks for having me.
All right, well, coming up, artificial intelligence is also creating plenty of buzz among venture capitalists. And after the break, we'll dissect the latest trends in startup funding and where VC firms are placing their money when it comes to emerging technology. Stay with us.
Today we're talking about the future of dining with an iconic brand, P.F. Chang's. With 300 restaurants around the world, they're taking a bold new step into fast casual dining, a new concept called Pagoda. And I have the CEO here to tell me all about it, only on Taking Stock. Now, obviously your focus is your 300 P.F. Chang's that you have around the world. But talk to me more about this new Pagoda concept.
The type of service and food that we serve, which is made from scratch, high quality ingredients, great hospitality, great ambience, that can be used in more use cases, more need states, more occasions, more people more frequently. So the light bulb moment, if there's one, is wait a second, we can do a great job for you on a lunch during the week. And, and it can be very fast, it can be very affordable, can be very, very abundant, and of course, delicious. We just have to adapt the way we do things, steps of service, abundance, price points, to be able to serve you this way.
Now, while you're remaining so agile with this ever-changing landscape in the food and beverage sector, how do you sustain your authenticity?
The brand has to know, what they stand for, right? In our case, every day is a celebration. We want to elevate every occasion and make it special to people, right? So if it's a day-to-day lunch, we created a concept here in the US that we call Express Lunch in our bistros, which is lunch in 20 minutes or lunches on us. It's the same ingredients, same kitchen, same steps of service, just an individual bowl because that's the occasion there. So understand who the brand is, what the brand stands for, and what the consumer, the customer, in our case, the guests, the way they want to live their lives and adapt ourselves.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here at the New York Stock Exchange. Well, as the Consumer Electronics Show gets underway in Las Vegas, it does inspire the innovation agenda for the year ahead. We'll be covering it throughout the week as the New York Stock Exchange does have a presence on the ground via our social media team. And of course, we're integrating comments and interviews into our show this week. So to talk more about innovation and particularly where the startup scene is, I do want to bring in my colleague Trinity Chavez with more. Hi, Trinity.
Hey, Kristen, that's right. We're going to be covering all of that and so much more on our show this week. And joining us now to break down all of the numbers and trends shaping the global venture landscape is Janae Tier. She is a senior data editor at Crunchbase. Janae, it's great to have you with us on the show this morning.
Good morning, Kristen. Great to be here.
Janae, so, let's just start by talking about this conversation. I do want to talk to you about AI specifically. With AI-related companies attracting nearly $100 billion and leading global venture funding, what specific subfields within AI are driving this surge in investment?
Yeah. Well, I think what's interesting is if you look at the global report just came out today, it's looking at the whole of 2024 as well as the fourth quarter where there was a big boost. And what we saw, and I think that was significant that you've noted, is that a third of funding went into the AI sector in 2024. That was at $100 billion. It was much larger than what we saw in 2023 at around $50 billion. So you can see there's a lot of momentum around the sector. And, AI kind of covers so many different sectors. It's almost like there's a layer across tech. And so what you see is the infrastructure and data management companies were key in AI, the large language models, the foundation model companies, but then it also affects industries like healthcare and robotics and autonomous driving and cybersecurity and the military and defense, which has become a growing sector as well. So AI is a technology which is really spreading through everything. And for us, it's unprecedented to see one sector reach a third of all funding. Typically, the peak in 2021 was fintech. That was around a fifth of all funding. So this is certainly unprecedented, but makes sense given the drive around AI in 2024.
And billion-dollar funding rounds accounted for nearly 20% of total funding in 2024, largely fueled by AI. So what does this tell us about investor confidence in the sector and the scale of opportunities they see?
Yeah. Well, when I speak to investors, I've been running an AI series where I just speak to investors looking at the AI sector, and most of them are saying that 80% of their investments are focused on AI specifically. And so there is the sense that it is very competitive out there in the AI space. If you have any knowledge in the sector or you stand out in the sector, you're going to get a very competitive funding round. So certainly there does seem to be somewhat of a bubble and prices are driven up, but it means they're going to be very big outcomes in the sector and hence all of the market driving towards this.
And the U.S. captured about 58% of global funding in 2024, a significant increase over 2023. So what factors contributed to this growth and how does it position the U.S. in the global innovation landscape?
Yeah. Well, the US, it's interesting. It's usually, in prior years, it's around 49 to 50% of funding goes into the US market. And this jumped in 24 to around 57%. And Silicon Valley and the San Francisco Bay Area led as well with around $90 billion, again higher than in previous years. And so what we've seen is really this drive towards AI, which has positioned the US as the leading market in 2024, which has allowed the US to gain a much bigger share of funding in 2024.
And you know, according to your outlook, Q4 2024 is on track to be the strongest quarter in 2 years. So what were the key drivers behind this resurgence, and do you anticipate this momentum to carry on through 2025?
Yeah, well, there were some very large rounds which were raised in AI, and what we found over the downturn since Q3, Q2, or Q3 of 2022, the funding has fluctuated. When there's these very large billion-dollar rounds in a quarter, funding will go up that quarter. When the billion-dollar rounds pull back a bit, the funding the following quarter will go down. And so what we've seen is funding fluctuate, but really what drove that growth in Q4 was a very large round raised by Databricks, raised the biggest round of the year at $10 billion. XAI and OpenAI both also raised very large fundings in that quarter as well, north of $6 billion. So we've just had these huge rounds, but in a sense, even though, you know, there's a lot going into these very large companies, broadly what we've seen in 2024 is there is a pickup in 2024 over 2023, that there is a sense that the venture markets are coming back. There is more confidence in the market. When I look at investors who are the most active, they've been more active in 2024 than 2023. You see a sharper pullback. So I think there is this sense that the markets are looking up. There is an expectation that the IPO markets might open a little bit more in 2024. Exits have been incredibly slow. So I think there is, you know, 2024, I would say, was a stronger year. Even though it's up only 3%, it was $314 billion this year as opposed to around $304 billion. So that's up around 3%, but the mood around venture is very, very different.
Thank you so much for all of that key insights. I know we're going to have a lot to look out for come the rest of 2025. Thanks again. That's Junaid Tier, Senior Data Editor at Crunchbase.
Thanks, Kristen.
Coming up, CES 2025 kicks off today, and one company is already making news. So stay tuned for those details.
Welcome to Floor Talk. It's great to have you on the show today.
It's great to be here, Judy, and it's a real privilege to talk to you.
So you are the CEO of Agilent.
Yes.
Tell me about the company and what you do.
We're the people behind the scenes that keep your water safe, your food safe. We advance therapeutics, so we test pharma and biopharmaceutical drugs as they're released. So we're the people behind the scenes keeping the world safe.
Now, you held your investor day today at the New York Stock Exchange, and you introduced a new strategy. So tell me about that strategy and what it means for your stakeholders and the industries that you serve.
We're becoming more customer-first strategy, so it's a customer-led strategy led with our markets. So our three main markets are pharma, biopharma, clinical and diagnostics and applied. So we're really leading with our markets and seeing how we can bring more solutions to our customers and faster innovation across these markets. So we're really excited about it, and we've also launched a transformation in the company called Ignite. And that's really to help with our customers, making it easier for them to do business with us, for employees, making it easier for employees to work and be more productive, of course, and for customers and our shareholders, of course, to continue our growth.
Now, can you share more about these high growth opportunities and the solutions you're providing for them?
Yeah, I can share one really good example. So Forever Chemicals, you probably heard of that, PFAS molecules and compounds. We test for that globally, so it's a big emerging business for us. So we're the ones that help testing labs test for these molecules. And to give you a sense of our detection limits on our equipment, think about a drop of water in an Olympic-sized swimming pool. That's the level of detection we can do for these compounds, and it's, of course, moving to different modalities, so we're there to really test for these compounds.
Now, today you rang the opening bell to mark the 25th anniversary as a public company.
Welcome back to NYSE TV Live. I'm Trinity Chavez in studio. Now, the future of innovation takes center stage at CES in Las Vegas, where the biggest names in tech and some of the brightest minds in the industry are unveiling game-changing advancements. From NYSE-listed companies driving the next wave of transformation to groundbreaking startups redefining what's possible. This year's CES is a showcase for cutting-edge technology and visionary leadership. But first, let's take a look back at some of the highlights from last year. The NYSE is at CES, uncovering innovations that are not only changing the game, but changing the world. Hundreds of thousands of people come to Las Vegas every single year just to attend CES. Several NYSE-listed companies also have booths set up. Let's go in and take a look at what they have.
We are highlighting how technology helps farmers do more with less.
We have a lot of customer discussions around assistant driving and automated driving for the future.
There's a big transition in the automotive industry. Modernizing what happened with cell phones maybe a decade ago is now happening to the vehicle today.
Look at the zero turn that's being displayed right now. Automotives are huge this year at CES.
We're going to be working together to bring in autonomy on the road with trucking by 2027 in the market.
We are inside the first driverless truck, and Kodiak is rolling it out later this year.
2024 is really going to be the year of driverless.
You have a flying car. That's pretty incredible.
All the flying parts, the propeller, the rotor, the arm, they can fall into the car body.
What we're showcasing here are the sort of systems that are going to be needed for the vehicles of today as well as the vehicles of the future.
The most exciting product that we have today certainly are EV charging performance simulation solutions.
These exhibits are crazy. Look at this right behind me. This is just on another level. Wow, they even make the minivan look cool. I could get used to traveling like this. Okay, we have to see if we can get on this thing. I need a breather. I'm just gonna stay here for the rest of the day. I feel like if we keep going, I'm never gonna get up out of here.
We are trying to deliver our product and solutions to the home. We are always thinking about your health and your wellness.
Garmin created this wearable heart rate monitor that you can just clip to your sports bra.
Garmin is known for our incredible battery life and our wellness features. We're super excited to roll this out to the market.
CES has this trend of going all in about certain lines of products to get a space full of innovation.
Is there a way that we can build a car that gets better every day? Think of all the cloud applications that get updated hundreds of times in a week. And that's exactly what we want for cars.
A lot of times technology gets ahead of the consumer. In 2024, you're really going to see a lot of the emerging technology come together with the consumer in a meaningful way.
I literally feel like I am moving right now. That's just how realistic this simulation is.
This is the future of retail. What we're really focused on is how do we help people save money and live better? And that's for our associates, that's for our customers and members, and those are the communities that we serve.
3M, at our heart, we're a material science company. And what we're showing here at CES is how we're actively building for tomorrow with our inventions, with our technology.
This is the forefront of technology, innovative ideas, changing the world as we know it. And as we are gearing up for CES to kick off on the West Coast, tech giant NVIDIA is already making headlines with some major announcements. Now for this, I want to bring in my colleague Kristen Scholler for more on this story. Kristen, good morning. Kristen,
much about NVIDIA yesterday.
Kristen, I think I'm losing your audio a little bit, but I think that you were just talking about how yesterday they gave their keynote address and they were talking about all of their announcements that they're gearing up for this week. Is that correct?
That's right, Trinity. So, of course, anytime NVIDIA speaks, investors listen. Anyone in the tech community listens. And we had seen NVIDIA shares close at a record high yesterday. That stock was up more than 3%. This morning, 5 minutes before the market opens, it's up another 2.5%, set to open at a record. And that is after we heard from the CEO, Jensen Huang of NVIDIA, one of the biggest companies out there, unveil new chips for desktops and PCs yesterday. It builds on that Blackwell architecture. That is what makes NVIDIA's chips or semiconductors so attractive, because the speed and capacity at which they are able to process far exceeds anything else out there. NVIDIA, now part of the Dow as of late last year, also a driving force in the S&P 500 as well. And so when we see announcements like this from NVIDIA, they can move the overall market. Trinity, I know you were on the ground last year at CES as we showed, and as it kicks off today, tell us what else we can expect as the event gets underway through Friday.
Yeah, you know, Kristen, there was so much that we covered last year, and I know that we are going to be covering so much more on the show this year. You know, we had companies like NVIDIA there on the ground, you know, Walmart, as you saw, John Deere, so many listed companies as well as private companies that are really disrupting industries and making a difference through their innovative technology, and we are going to be the first to see it, and we're going to be showcasing it here on the show as we show all of our viewers what's happening there on the ground. This is one of the largest tech conference to happen in the world. Over 38,000, actually 138,000 people attended this just last year. And you know, we have a lot more to get to, Kristen, but we're going to take a quick break, so don't go anywhere. We have the opening bell coming up. On this episode of Taking Stock, we are thrilled to have May Habib join us. She is the CEO and co-founder of Ryder. We're going to be speaking to her about how they are bringing generative AI to large enterprises. Let's get started.
We've been in generative AI for the last 4 years, working on bringing generative AI to the enterprise. And what we've learned from folks is they need a full solution. LLMs are very powerful, but not enough to very quickly get to value on these mission-critical workflows.
And you know, you recently announced a $200 million Series C funding with some of the biggest and most influential companies backing this effort. Talk to me more about the partnership and why was now the right time to have this fundraise.
We had some incredible corporates join the round: Salesforce, Adobe, Workday, IBM. And there's a real realization that enterprise generative AI, especially where we're going on agentic workflows, requires a real understanding of these real-world mission-critical flows that is just much more complex than folks thought. And I think being able to stitch together multiple systems, multiple departments with generative AI, rewiring these flows, requires really a coalition. And that's what is so exciting about the Series C that we raised.
What are your plans for this new funding round?
Certainly expand the team, expand our footprint, but invest in this next generation of models, action-oriented models that are capable of autonomous action inside of the enterprise with reliability, consistency, security that enterprises need.
Talk to me about how your past experiences have helped shape the ethos of your company today.
I grew up in a small family business and learned a lot about the importance of staying really close to the details.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, momentarily, NYSE-listed company Pursuit, as you see behind me, is already on the podium, prepared to ring that opening bell after getting a brand new look. Trinity Chavez has more. Trinity, what should our viewers know about this as we await that open?
That's right, Kristen. Well, the company has a brand new look, including its name, after completing its separation from its GES business, formerly known as Viad. Pursuit is now identifying as a pure play attractions and hospitality company, and the company owns and operates in the US, Canada, and Iceland. Pursuit's properties include 15 world-class attractions and 28 distinctive lodges, also includes leisure activities, experiential marketing, and live events. And later on in this hour, I'll speak with today's bell ringer, who is the CEO, David Barry, all about his plans for the business in the new year. So, Kristen, what should we anticipate from the market after Barry rings the opening bell and opens up the U.S. equity markets for the day?
That's right, Trinity. We are just a few seconds away from that opening bell, but all eyes, of course, on jobs data this week and really major announcements coming out of CES, as we've covered. We know technology is the bulk of these major indexes. Innovation drives the market. Let's take a listen to the opening bell. All right, we are officially off to the races. Pursuits celebrated the opening bell here at the New York Stock Exchange, and we do see fractional gains across the board on the major indexes after the S&P notched decent gains yesterday, fueled by technology stocks. The Dow and the S&P up about 0.4% at the open. Well, joining me now with more is Mark Lehman. He's the head of Citizens JMP. Mark, it's great to have you on the show. Jobs data in focus this week, but of course, key technology news coming out of CES as well. What are you focused on?
Good morning. I think what you just said at the top of the hour, which is CES and technology is the big story of the week. We've been saying for a long time here at Citizens that technology is going to continue to drive the market. It has done so. I think there's a lot of naysayers about that, but we also think that the definition of technology has changed greatly. So you show those clips from CES. It's a electronics conference, but you see cars and you see a lot of healthcare. You see a lot of other there, but tech is the underlying foundation. We've been saying forever that it's a horizontal, not a vertical. And we're certainly seeing that in the stock market.
Mm-hmm. What are some signs that have given you optimism about technology in particular? I'm thinking back even to a little less than a year ago with Reddit's IPO, well received here at the New York Stock Exchange.
Yeah, we fortunately were a big part of that IPO, and I've been very bullish on that company. I think what you're seeing is the ability to monetize from some of these bigger companies, and just that IPO is a good example. Reddit is not a new company. It's been around a very long time. And one of the theses our analyst Andrew Boone said is this is a company that will be able to monetize their user base. And they've done an unbelievably good job at doing that. In fact, I joked at the time they went public. I told my kids that they were going public. My daughter was like, they're kind of getting legit. I look at that site all the time. And that was about as good a recommendation as I had. So that's what we're looking at. It's the ability to monetize. We're seeing that in other ways. I live in San Francisco, and Waymo has an equal market share as Lyft right now, out of nowhere. And just think about that technology and how big that will be globally eventually. Right now it's in San Francisco, Los Angeles, and some other markets. But it's metaphoric for what's going on with technology. It is taking over all these industries. It's happening, and they're monetizing.
Mark, since you're so focused on technology, I do want to ask you about news this morning. Meta scrapping its fact-checking program, bringing back political content. Of course, UFC's Dana White also joining Meta's board just weeks before President-elect Donald Trump is set to be inaugurated on January 20th. What does that mean for that tech firm?
Well, it's interesting. I mean, Meta had a big day yesterday. It's obviously had a big couple of years after its fall. It's been one of the great stocks, as we know, in 2024, and it's continued into 25. I think the political landscape having changed will change a lot for what's going on at companies. You're seeing a lot of people go to the Mar-a-Lago doorsteps and try to figure out how to play this. We're seeing it across technology, like you said. Onshoring will be a theme here. We've been talking about globalization for a very long time, and onshoring is taking place with the combination of the technology gains that we've had here from lots of companies, as well as the kind of construction and onshoring. We're going to have semiconductors with Build Back Better. The theme of this is the best market globally will continue to play out. We've been saying that for a very long time. Mm-hmm. It's the best house on the block, and I think that's being amplified what's going on. The technology innovations that are going on globally are happening in the United States. Mm-hmm. With AI, semiconductors, with data centers. That's happening here, and that's going to be thematic for the rest of the decade.
I do want to ask, though, Mark, because we saw a bit of a choppy start to the year, at least on the first day of trade. The so-called Santa Claus rally didn't play out as it has in the past. Yet this is after a 2-year bull market where we've seen the S&P rise more than 50% for its best 2-year stretch back-to-back since the late 1990s. And we remember how positive the stock market was there then. Do you anticipate that we will see volatility this year, and how should investors react to that?
It will be volatile, and I think Washington will continue to be volatile. And unfortunately, the hype rarely outpaces the reality. So I think investors have to be very, very attuned to that. I think they also have to be ready for those swings and also be comfortable with that, because the amount of legislation and the ability to legislate is going to be really tough. You have a very narrow majority for the Republicans in the House. There will be lots of bluster out of the White House starting January 20th, and those things will move stocks. And I think you got to find those companies and those industries that you want to play in. And some of them we mentioned earlier here. We got a big conference here in San Francisco next week on healthcare. Healthcare is going to be a very big part of the economy, obviously. It's been under a lot of stress for the last couple of years relative to technology, but I don't think the gains that you're going to see out of some of those companies are going to be muted by the White House. I think what you're going to see is some ability to make a lot of money, but you got to be ready, because I think this will be a much more volatile year.
Yeah.
And people have to be ready for that, not fearful.
Yeah. I like that. Ready, not fearful. Mark Lehman, head of Citizens JMP. So great to have you on the show. Happy New Year, and we hope to see you soon. All right, well, coming up with the second Trump administration set to start in just less than 2 weeks, we'll dive deeper into what it could mean for the crypto space and how it could impact this recent rally up next.
Colleen, welcome to Floor Talk. It's great to have you on the show.
Judy, thanks for having me. I'm so excited to be here.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I've really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the New York Stock Exchange. Well, the price of Bitcoin hit $100,000 a token yet again on Wednesday. That's part of an industry-wide rally following President-elect Donald Trump's win in November. But what should we expect from Bitcoin and the broader digital asset industry once Trump takes office come January 20th? Well, joining me now with more is Ari Redbird, Global Head of Policy and Government Affairs at TRM Labs. Great to have you on the show this morning, and Happy New Year.
Terrific. Happy New Year, and thank you so much for having me. Great to be on.
Look, so much focus on cryptocurrency, certainly just in the past 12 months. The Bitcoin ETF approved about this time last year, and then a new administration set to take effect on January 20th. What do you think the first 100 days looks like under this new pro-crypto administration?
Yeah, it's a really exciting moment. And, we saw a lot of promises on the campaign trail, but I think we're already starting to see them play out a bit. And it's going to be a combination of executive action, right? We've already seen a number of really key appointments when it comes to crypto. Scott Bessent, the incoming Treasury Secretary, has been very bullish in his comments around cryptocurrency and Bitcoin. We've seen Paul Atkins, who was a former SEC commissioner, who's done a lot of work in the space, who's very bullish on the technology, very sort of pro-business, take charge of the or be appointed as the next SEC chair. We've seen a crypto czar appointed to this sort of a brand new role. So it's a combination of we've already seen these key appointments when it comes to the people, but even that these roles exist at all. David Sachs, this incoming crypto czar, former PayPal executive, entrepreneur, investor. These are roles that didn't exist before, and it really just shows that already before day one, we see this administration leaning into technology and crypto and AI in particular. And look, there's this almost daily, appointments being made. All of them are very pro-technology, and it almost has this feel like, hey, we're in a space race right now, and the U.S. is going to catch up and potentially take the lead.
I am curious, Ari, because we hear a lot about volatility perhaps in the stock market this year as we adjust to whatever this new norm will be. We saw the promises during the campaign trail. We'll see how it plays out. But by and large, many of my guests think that we will end the year in a positive state. Should our viewers expect volatility in the crypto world as well?
I think you always expect volatility in the crypto world. And what I go back and forth on is whether we're experiencing a new normal. Like, are we entering a market where there's going to be volatility? That's how a 24/7 trading, that's how crypto never sleeps kind of market, where we see Bitcoin with some volatility, but maybe as a store of value, where we see these, meme coins and other types of assets, where we see stable coins being used for payments, which is going to be the sort of more stable way to interact with this new financial system. So I think we'll continue to see some volatility. But if you do see things like a strategic Bitcoin reserve, which we've heard is a strong possibility in the first 100 days, look, I think we're going to start to see legal clarity, and that's going to come from Congress. We've had this conversation in the U.S. for years about who's going to regulate the space. Is it the CFTC? Is it the SEC? I think we're going to get clarity around that, which should help with the sort of long-term volatility issues that have plagued the industry to date. So I think we're going to see a combination of executive action very quickly, but we'll also see some activity in Congress getting legislation passed to bring legal clarity to the space.
Do you see Bitcoin as a buy and hold asset? We see more and more conversation about adding it to people's 401ks. Fidelity does offer it, for instance, in retirement plans. Or to you, is it more of a tradable asset?
I really have always seen it as a hold type asset. I think there's plenty of other types of crypto assets to trade in sort of this day trading type of way. I think I've always seen Bitcoin as potentially as a store of value. That's why we hear from the Trump administration, the incoming Trump administration, about a Bitcoin reserve. We're talking to states across the U.S. now. I talked to regulators in Texas recently who are talking about a Bitcoin reserve. So I think this idea of holding Bitcoin as a store of value, as a hedge, is something that we're going to see more and more. But yeah, no, I've always seen it that way.
And I am just curious in terms of where we go from here. We had seen the president-elect Donald Trump actually be bearish on Bitcoin and really not welcome it in his first administration. So as our viewers get acquainted with cryptocurrency, what has changed from now until then?
Yeah, no, I think it's a great question. I think what the real key more than anything else is, and obviously the people are critical, but the fact that we're now having a crypto czar who's working entirely on crypto and AI means that the U.S. wants to position itself to be a leader globally when it comes to technology. We were a leader in the age of the internet, right, with Silicon Valley and all the great tech companies that came out of the U.S. I think that's what this incoming administration is focused on, is that the U.S. needs to be a leader in new technology always. And today, the cutting edge technology is crypto and AI. And that's why there's this real focus on leading there. And I think that we've seen other countries, we've seen Europe pass MiCA, the marketing crypto assets legislation, to try to encourage crypto businesses to move there. I think the US sees an opportunity to say, hey, no, we want crypto businesses, we want technology businesses to build in the US. And that's really what this embrace of digital assets is all about.
Ari Redbird, Global Head of Policy and Government Affairs at TRM Labs. Ari, great to see you. And we'll see more of you, I'm sure, this new year.
Looking forward to it. Thank you so much.
Great. All right, well, stay with us, everyone, because up next, today's bell ringer is going to join us to talk about his biggest goals for 2025. We'll have more up next.
Colleen, welcome to Floor Talk. It's great to have you on the show.
Judy, thanks for having me. I'm so excited to be here.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I've really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done,
Welcome back to NYSE TV Live. I'm Trinity Chavez at the New York Stock Exchange, and joining us now is David Barry, CEO and President of Pursuit. They are here celebrating their rebranding to Pursuit, and you're here to talk all about it. Fresh off of the Bell Podium, you just opened up the markets for the day.
Exactly.
How are you feeling right now?
You know, it's joyful. It's a wonderful feeling to be here. It's been 10 years in the making. You know, Viad was a conglomerate that had several businesses in it, and so the decision to transform itself and Pursuit becoming a standalone, public company is just the most exciting thing that could happen for us and our team.
Now, I do want to talk to you about the inspiration of this rebranding and how it fits into the overall company vision. Talk to me about that.
Well, rebranding is actually probably more of a restructuring in the sense that GES, the business that we divested of on the 31st of December, great business, but really no synergies and connection in with Pursuit. Pursuit is an attractions and hospitality business that has a global footprint. And then Viad, a conglomerate that over time has divested itself of various businesses. So it was time for us to stand on our own. And that was based on a whole variety of things from, the board's view of our company to the way multiples work and so on. But it's an exciting time for us.
A very exciting time. And what a way to start 2025, right? But as you mentioned, you are a global company with headquarters in Canada, the US, and Iceland. Talk to me about expansion plans and your key focuses for the rest of the year.
Yeah, so headquarters for us is where guests and staff meet in an experience. And we're so lucky because we have these beautiful locations around the world that are really iconic, unforgettable, and inspiring. And so that's what motivates our team. That's what makes guests really happy, and that's how we create memories.
And speaking of creating memories, experiential marketing, try saying that 10 times fast, and live events, these are major focal points for your business and really creating that overall experience for your customers to make them want to keep coming back. Talk to me about how you continue to be innovative in this way.
So what are guests looking for when they're looking to book travel? First, they pick a destination and they might search, say, Banff in the Canadian Rockies, and then they really want to connect authentically with that place. So no one goes to the Canadian Rockies to see Iceland, right? They're going in a particular way to see a particular place. And so what's exciting for us is we try to find, what do you want to be famous for? What story can you tell about the Canadian Rockies that will resonate with everyone? And the same with Alaska, the same with Montana, the same with Iceland. It's really making authentic stories that guests want to be part of.
I love that. It's all about storytelling. That's what we try to do here every single day at the NYSE. I do want to talk to you about the biggest trends right now that you're seeing in the hospitality sector, where we've seen it shift so much, especially after COVID. Talk to me about what the biggest trends are.
I think the biggest trend is the search for authenticity. The high streets of the world have a lot of the same stores, and that's great if you need a pair of socks, but that's not why you went to London. And so for us, what we really work on doing is how do we make something that's truly unique, that is representative of the location that it's in? Is it iconic? Is it unforgettable? Is it inspiring? And if we can do that, we win.
Oh, I love that. And you are here at the New York Stock Exchange celebrating this milestone. What do you want our viewers to know about Pursuit and its vision for the future?
Well, I think what's exciting for us is that if you're looking for a way to connect with a destination, Pursuit is a great way to do that. So come to pursuitcollection.com, see what we do, understand who we are, and then from an investment standpoint, we have a proven track record over the last 10 years. And so we're excited to grow into the future, and that's what we're going to do with a clean balance sheet and some robust strength to go do it.
Would you say that's your primary message to investors?
I think that we've got an opportunity to continue to refine experiences and to drive a dynamic growth cycle, and that's what we're focused on.
Well, thank you so much again, David Berry, President and CEO at Pursuit. Thank you for joining me today.
Thank you.
Now joining us now is Jeff Tatarchuk, co-founder and Chief Growth Officer at TensorWave. Good morning. Thanks for joining us on the show today.
Good morning, Trini. Good to be here.
Now, I do want to just dive into this conversation, talking about how your company is at the forefront of AI and emerging trends. Obviously, they're at the forefront of conversations, especially here on Wall Street. So tell our viewers a little bit more about how you're spearheading this.
Yeah, well, TensorWave, simply put, is a cloud platform, and we build supercomputers for the digital brain of AI. We deploy large-scale GPUs to support training and inference for the growing demand of AI that's happening across the globe.
And talk to me about what are the biggest trends right now that you're seeing when it comes to merging AI with cloud technologies, and how it's opening up unique opportunities and possibilities, and what challenges you might be facing.
Yeah, well, right now as the demand for AI grows, the demand for resources continue to grow. A lot of people don't know the amount of compute and power necessary to be the backbone of what's needed for the growing demand for AI. And there's a lot of issues that come into play. The amount of power that's available in the world, the amount of data center space that's available in the world, and the amount of access to compute necessary to power AI on the training and inference side of things. And this is where we at TensorWave come in to be able to support users, as our expertise is in providing data center space. We have over a gigawatt of capacity of data center space across the United States and growing across the globe. And the ability to deploy these large-scale data centers and support compute as this trend continues to grow over time.
What industries or sectors would you say that TensorWave is impacting most, and who are your customers?
Yeah, that's a great question. So we see a lot of demand right now with the hyperscalers. We just saw Microsoft just announced that they are going to be spending $80 billion the first half of this year going into compute. And as great as a lot of these hyperscalers are, they're a big ship. And with the speed in which AI is moving, they need a lot more specialized support to come in and to be able to help them. And that's where we come in. We also are able to support a lot of the startups and scale-ups that are needing access to even more compute. These hyperscalers aren't able to provide. And so we get to come in and provide custom, fine-tuned infrastructure specifically for their use cases. And so, a lot of AI just started off with chatbots, and AI is growing way beyond chatbots now into agentic workflows and supporting healthcare, education, and gaming across the board. And so we're seeing a huge wave sweep across the world with the demand for AI, and the need for compute is there. And this is where we come in to support customers on their need for compute.
But how do you go about keeping up with this rapidly evolving marketplace? I mean, as you said, AI cloud impacts every single industry across every sector nearly, right? So talk to me about how you keep up with this ever-changing landscape.
Yeah, that's a great question. It's being able to stay at the forefront of this technology so that we have the latest and greatest bleeding edge technology deployed in our data centers. A lot of data centers today have older technology that's less dense and not able to support the current AI infrastructure that needs to be deployed. And this is where we get to come in, retrofit these data centers, get them up to the level they need to be in order to support these AI workloads. And then we come in and build the cloud platform on top of that to continue to stay at the cutting edge as these needs continue to grow. And so this is our expertise, and this is what we continue to focus on, is data centers are going from air cooled to liquid cooled. And as the power demand continues to increase, this is where we come in to be able to support and give customers exactly what they need at the scale they need it, and beyond.
And being CES is arguably the largest tech conference in the world, and it's a huge platform for making announcements, displaying new tech. What are you most looking forward to this week?
Yeah, it's an exciting time to see what's happening on the consumer side of things. AI was mostly focused on the enterprise, the B2B side of things, but now we're seeing a lot more user adoption when it comes to AI beyond just the chatbots, as I had mentioned before. And so seeing how AI is going to be integrated into personal computers and how it's going to be integrated into our everyday lives is what's going to be the most exciting thing to us, as it alleviates us from a lot of the work we need to do so that we can focus on the things that are most important to us. And that's what I'm excited about seeing at this year's CES here in Las Vegas.
We have about 30 seconds left, so I do want you to tease our viewers a little bit as to what's next for TensorWave.
Yeah, well, what's next is we are continuing to grow and scale. We're launching across the United States. And if you need access to compute, if you need help deploying large-scale compute for training or for inference at scale, feel free to reach out to us. Happy to continue to support you.
Thank you so much again, Jeff Tatarchuk, co-founder and Chief Growth Officer at TensorWave. Thank you.
Thank you so much.
Now, as we near the end of the show, I do want to bring in my colleague, Kristen Scholler. Kristen, action-packed show. We got a lot of CES in there as well as markets. What do you think?
Trinity, you're exactly right. And look, as our viewers have said, whether they're VC startups, whether they're publicly listed companies or investors, everyone is focusing on the Consumer Electronics Show this year, and that's because of major announcements like the one that we saw late yesterday. And Jensen Huang, he's the CEO of NVIDIA, he had a keynote last night before CES officially kicked off in earnest today, unveiling new chips specifically for PCs, laptops, and desktops. And of course, a lot of that momentum has driven the optimism that we've seen in the market just over the course of this week. A reminder to our viewers, it is of course a shortened trading week as we mourn the death of Jimmy Carter on Thursday. But Trinity, I know you and I will have a lot more coverage throughout this week when it comes to the Consumer Electronics Show, the markets, and certainly jobs. So we'll leave it there for today, but thank you everyone for watching NYSE TV Live. As always, from Trinity Chavez, myself, our entire team, we'll see you back here tomorrow morning.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing. This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.